Hi everybody, Frank Finance here. Hope you're having a wonderful day. Today we're going to be doing a stock analysis on C3.AI, ticker symbol AI. So today we're going to be going over C3.AI's product line. We're going to look at one of their new products, Machina, a little more in depth and evaluate the growth potential. We're going to look at AI spending. We're going to look at their current clients. We're going to evaluate their stock price, and then I'm going to give my thoughts on what I believe C3.AI can do in the next 12 months. Thank you so much for watching thus far. Please consider subscribing, like the video if you find it helpful, and also leave a comment down below and tell me what you think about C3.AI. Alright, so the first thing I wanted to do is go through what C3.AI has to offer in their software solutions. First up on the list is C3.AI Suite. Now this is a platform for building AI-based applications, and this can be really custom development, and it's usually brought on by a client. They build out their AI tools through the AI suite, and then they can deploy that in their environments and use that. Now, that kind of moves me on to the second one. They do have some of these pre-built applications, and that's what this second segment is. We can go and look at this briefly. So they have stuff for anti-money laundering, smart lending, predictive maintenance. I think this is what they're using for the Air Force right now. Yield optimization, workforce analytics, and see there's just some pre-built different analytics that they have. So moving on to the third, we have C3.AI CRM. Now this is a kind of a collaboration that they have between Microsoft and Adobe. And what they've done is they've kind of packaged a CRM that uses the AI to pull out information specific to that particular industry. And so you can see the different industries that they're targeting here. And so I think this is a really clever idea. Instead of trying to make a system that wasn't built for AI work with AI, they've kind of created partners, and they're trying to create some sort of synergy there to do that. And so it could be a really clever idea. Last up, we have C3.AI Ex Machina. This is a low-code, no-code environment for data scientists to build their models. If we go down a little bit on this page, it kind of makes it easy to do your connections, or someone who's familiar with it being able to make those connections to do it without actually doing any code. Build and manage AI models without writing code. Now, I think this is where is a little bit over my head in terms of the technology here, but I'm assuming these models were built actually by a data scientist or someone who knows how to build the models. I don't believe these are out-of-the-box models that someone you just say, oh well, I want it to train against and predict X against this type of data set. I don't think that's how it's working. I think someone's actually building this model, and then they apply it against the data set, and then it gives you out the data that you're wanting to. Now, in terms of revenue opportunity, and this is the main purpose of sharing this, is that there's, one analyst has said that this has the potential to be just on its own a $2.6 billion product. However, you have to account for, he's saying that this is used by 2,000 companies multiplied by an average of 1.6 million if every company used it to the full potential. And just know there's only 7 to 10 customers that they have right now. So kind of take that into account. It's going to take a while. And just so you know, I mean, they're never going to get to 2,000 companies anyways. It's not realistic to be serving all 2,000. But I think they will get a good portion of, let's say, the top 500, just because of the platform, what it can do, and the amount of benefit that it provides to the companies. Next up, I just want to talk about the potential of AI. Now, this isn't particular strictly to C3.AI. However, it gives a general impact on how much money is going to be spent in these types of industries. So you can see from the top to the bottom, retail is number one at 400 to 800 billion dollars, and you can just kind of look down the line. Some of the big names that they're working with right now are in aerospace and defense. They're working with oil and gas companies. They're working with banking. And I'll show who those people are, but just to get an idea of the amount of money going to be spent on AI in these particular industries. Next up, I just wanted to go over quickly some of the clientele of C3.AI. So you can see there's got some pretty big names here: 3M, Shell, Raytheon, Koch, Baker Hughes, Duke Energy, U.S. Air Force. These are some really great partners, and I think if they have success with them, they'll continue to grow their market share. Now, I briefly wanted to go over their last quarter results. Now, they had total revenue of $49.1 million for the quarter, an increase of 19% year over year. Their subscription revenue was $42.7 million of that $49 million, and that subscription revenue has actually increased by 23% year over year. Now, the professional services had gone down. However, it's really not that... really wasn't a huge decrease, in considering the environment where people probably weren't bringing on a lot of new implementations. We're probably pausing spending on this type of platform. It really didn't do that bad, and so I think the results for the quarter were quite well. Another thing that I think is worth highlighting is that C3.AI has over $1 billion of cash or cash equivalents. And then in terms of liabilities, their liabilities are a little over $100 million at $110 million. So financially, it's fairly healthy, not really at risk there. All right, so let's talk about stock price. Now, this one's an interesting. C3.AI IPO'd on December 9th. They were supposed to IPO around $42 a share. When they opened up, it opened up above $100, and it closed at $100. So ever since that opening, it's been $100 all the way up until March 1st, when they released their first earnings. They had earnings per share was lower than expected, and they got beat up really heavily. So it went from $100 a share down into the 80 range, and then hung out there, goes up a little bit, goes down. And this has been on a downward trajectory for the last month and a half. Now, there's been about 2-3 weeks now where it's been fairly stable in between $60 and $70. However, it continues to pop up, and I don't know if we're going to continue to see another downtrend here, or this is where it finally gets steam. Now, I think, honestly, what's going to need to happen here is that we're going to need to see another earnings call before this gains any more traction. But clearly, the steam from the IPO is starting to wear off right after the realization of the earnings on March 1st. Now, that doesn't mean I don't like the stock. I really do like the stock. I think C3.AI is a promising company. I think it has a lot going for it in terms of what they have, and from a product perspective, I think there's a lot of untapped potential inside of that market. And I do believe in the company's fundamentals on what they plan to do with AI and inside of these predictive analytics inside of these companies. Now, the big question is, what do I think C3.AI is going to do in the next 12 months in terms of stock price? Well, when I look at the graph, I have a lot of confidence that this stabilization in the $60 to $70 range is more like a floor for the stock. However, I do think there is extra downside potential, and just very anecdotally, I think that's around the $42 range, just to where they were anticipating the IPO. I think that's a very safe floor, in the sense that, investment banks, that's what they were valuing them at their IPO. Now, I don't think that's actually going to happen. I am more optimistic on this stock. I entered into a long position a couple days ago when it was in the $50 range, high $50 range, in like the 59, 60, 65 range. And so I do believe in this stock. I think it has a lot more upside potential than downside. But be conservative. My belief in the next 12 months is anywhere from $90 to $115 per share. I think that is more than doable if they have a couple earnings calls that are positive. They can show that they're having an EPS that's beating the estimates. I think that's originally why they got beat up originally. I don't think it was just because the stock cooled off from the IPO. I think it was a little bit of reality setting in that if you don't meet earnings expectations, you're gonna get beat up in stock. So I think that what was kind of an inflated stock price kind of cooled off right there. It kind of gave people a glimpse of what happens, when you don't meet expectations. Now on the downside risk, I kind of mentioned this earlier at $42 a share. That indicates a 37% downside. Now I don't think this is going to happen. I don't think it's very likely. But I think it's a conservative estimate of what the floor is. I don't think it's ever going to get that low ever, because it didn't even IPO at that price. If you found this video helpful, please consider subscribing, like the video. Also, if you have any comments on what you think about my analysis, please leave them below. I'd also be interested in what you think about C3.AI. Thanks so much for watching today's video. Frank Finance, out.